Hello, hello. Come on now. Let's go, my friends. And I know that you, my friends, you are always thinking that, hey, this guy, Rob Rosa, he's hyped up. He's always ready to go over something new. Well, my friends, the thing that we want to talk about today, right, that I am here for you to discuss is to stop the hype. That's right. You heard me. What are you talking about, Rob? Stop the hype. Yes. All right. We know that mortgage rates in the Hartford area, let's say Hartford County, let's say central Connecticut, let's say in all of Connecticut and mostly in the country, mortgage rates have dipped to their lowest level in 10 months. Now that's about 6.58%. All right. But the point is it really the game changer that the headlines make it out to be? You see, on a median priced Hartford County home, that drop only saves about $97 a month. You spend more than $97 a month in Starbucks. Meanwhile, your property taxes and insurance can swing your monthly payment by hundreds of dollars. So, in this video, what I want to break down is today's rate versus January's peak with real monthly payment examples. Okay. And of course, as questions come up, you are more than welcome to bring them up to me. Okay. I also want to talk about the local numbers that matter more than the headline rate, inventory, days on market, insurance costs. And I break down in this video how buyers, sellers, and people who are waiters, right, waiting, can actually use this market moment. Now, everybody else is saying rates have fallen, act now, act now. And yes, don't get me wrong, my friends, that sounds fine to do. But by the end of this video, you're going to know exactly what numbers to watch if you're buying or selling, right? So let's start with the facts. Well, really, what has changed? Back in January, the average 30-year fixed mortgage rate hit around 7.04%. Right now, we're sitting closer to 6.58%. And that's when you have good credit. That's the lowest level we've seen in about 10 months. Now, that's a real improvement, don't get me wrong, but it's not a free fall. Don't mistake down lower rates for cheap. Affordability is still tough. What matters most is how does that actually hit your wallet, right? What's going on? How is it going to hit your wallet? Well, in Hartford County, the median home price right now is about $396,000. So if you bought that home with 20% down at January's peak of 7.04%, your monthly principal and interest payment would have been around $2,116. At today's 6.58% rate, that same payment drops to around $2,019. So there's your savings of about $97 per month. All right, my friends. So with that in mind, yes, you are saving, but we're talking about a dinner out. We're not talking about a life-changing difference. We're not talking about that's something that's going to change you forever. That's $97 a month. That's why you can't just stop at the rate headline, right? What is the real killer? Let's talk about the truth, my friends. The real killer right now is taxes and insurance. Here's the part most people skip. You see, in Connecticut, your property taxes and your insurance can swing your monthly payment by hundreds of dollars, sometimes more than the rate difference we just calculated. For example, let's say you buy a home in West Hartford. Well, the mill rate means you could be paying over $1,000 a month just in property taxes on a median priced home. And of course, that's the same in Glastonbury. That's close to the same in South Windsor. That's close to the same in Avon. That's close to the same in Simsbury. And the story can go on and on and on. All right. So, with that in mind, homeowners insurance in our area averages between $130 to $150 a month, depending on the town and the type of home. And if you're in a flood zone, like I am, right, you need separate flood insurance, which is not included in a standard policy. That could change the equation completely. So, remember today's dip, yes, it is helpful, but your total monthly cost is shaped by taxes and insurance just as much, sometimes more, my friends. Now, what should you be watching? What's going to help you? Now, if you're serious about considering buying or selling, here are the numbers that matter more than this headline rate, right? That you're seeing on the news and everybody's going different. I mean, everybody's going crazy, is the rate spread. That's what you need to watch. That's the difference between the 30-year mortgage rate and the 10-year treasury yield. Right now, that spread is around 2.3%. Historically, it's closer to 1.5 to 2%. So if that spread narrows, mortgage rates can fall even if the Fed doesn't make a move. Also, we need to talk about inventory. In Connecticut, we have about 2 months of housing supply. So I'm going to tell you straightforward, whether you want to believe it or not. And yes, things might be changing slowly here or there, but it's still a seller's market. The third thing to keep a look at, to keep looking at, and to keep an eye on is days on market. Hartford County is averaging around 24 days. The faster homes move, the stronger sellers hold their ground. Now, we're talking about numbers from July, and who knows, they probably changed a little bit in August, but that still remains to be seen. And the fourth thing that you should be watching is new listings and price cuts. Remember, more homes are starting to hit the market, but the pace is still slow. And some towns are starting to see some reductions. And that is where the buyers are going to find opportunities. All right. Now, if you're watching right now, drop your town in the comments. Tell me, is it West Hartford, East Hartford, Glastonbury, Manchester, Coventry, Tolland, Simsbury, Berlin, Rocky Hill? And I can break down the taxes and insurance in your town, right? And show you what your potential monthly payment would be. And if you want my 3 scenario payment worksheet, which shows you your payment at 6.25%, 6.5%, and 6.75%, just type plan in the comments. That's PLAN, and I will definitely send it over. Now, let's talk about buyers versus sellers versus waiters. Right? Waiters, not the people that serve you food, but the people who are just sitting there day in and day out, just waiting, my friend. Okay. Well, what should you actually do? Where should you make a move or not make a move? So if you're buying and you need to make the move, you need to move, focus on your monthly payment, not just the headline rate. Look at rate buy downs. Sometimes the seller or the lender, they will cover a point. That saves you money. Target homes that have been sitting on the market for at least 2 weeks, because that's where you might find negotiating power. Now, if you're selling, price your home for where the next reduction would be, not just based on the last comparable sale. With inventory tight, presentation and pricing precision, along with great marketing, is what gets a home sold. If you're waiting, make sure it's intentional. Track the rate spread like we had just talked about. Track your town's days on market. Run the numbers on a couple of rate scenarios. Sometimes waiting will cost you more in higher home prices, even if the rates dip slightly. Because the truth of the matter is, when the rates dip and we have such a tight seller market, what are we going to get? More buyers looking for those same houses. All right. Now, let me throw this out there. I want to tell you very straightforwardly, Connecticut keeps giving huge tax breaks for luxury rental developments. I'm telling you, my friends, this needs to stop. This is happening while first-time home buyers can't even find an affordable starter home. How does that make sense? What do you think about that? Drop your thoughts in the comments, and I'd love to hear if this is frustrating you too. I have written a couple of articles about this, and I can tell you we need incentives for builders to be able to build starter homes here in Connecticut, and it needs to start right away. So here's my stance. Yes, rates have edged downward, my friends, and that's great. That may or may not be an opportunity depending on where you're at with things right now. Everyone else out there in the industry is shouting, rates fell, act now, come on, let's go, let's go. I'm not here for that, right? I'm here to help you translate Hartford area's, Central Connecticut's numbers, town by town, so you can make the right move for you, for your family, for your life, not just the headlines. So if you want that 3-scenario worksheet, type plan, PLAN, in the comments, or send me a message. We can go over the numbers together. There's no pressure, there's no hype. And I can tell you very, very straightforwardly and 100% honestly, that is what I enjoy more than anything else, is actually sitting down and talking with you, going over the numbers, discussing how it may be able to help you improve your life. So here we go, my friends. I appreciate you tuning in. Hopefully I'll see you around, and I hope you're having a great day. This has been Rob Rosa, hopefully your favorite real estate broker, signing out, and we'll talk to you soon.